So, good morning, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, your host, coming at you live straight out of Colorado, right near the U.S. Air Force Academy here on Saturday, May the 11th, 2019. How time flies. As always, all information's for educational use only. That's me in front of my monitors. Wearing the same dang shirt. It's a Tommy Bahama Silk, my favorite casual shirts, or Tommy Bahama Silk shirts. Highly recommend them. About $100 each, and well worth every penny of it. Most comfortable shirt in the world. Anyway, our winning alert of the week, I always like to give at least one or two of these examples. The pattern was a gap continuation. It's not evident on this one-day chart, but this was a small gap that continued up above a cup pattern high, and the alert that my members got before the opening bell was to get ready to rock and roll if this took out new highs and punched out over 1430. It raced up almost 2 points, actually over 2 points before it peaked out up near 17. So good chart. Real trade example from yesterday afternoon. I was trading TVIX often as I'm known to do, and I bought near the exact bottom on the bounce at 23.27. So, and again, you should not be trading with people that aren't, or my humble advice would be learn from people who actually really trade recently, like yesterday, not people who just talk about charts for a living, because that's only 20% of it. The math and the numbers and the skill of risk management is vitally more important than simple chart patterns. So when you learn from an educator, make sure that they learn that they're also backing up what they're teaching with real money, recent real trades that they do, like I do, like I've done for 20 odd years. So anyway, the live room access, I posted the link in the chat box. If you don't see it or you want it again, just send me and thanks to those who've been registering, starting to get the orders in, go ahead and just send me a support ticket or an email. So you get to join me Monday through Friday from 9 a.m. till 10:30, plus my swing scans alerts are also included as well. So it's only $4.95, and that's a today only offer. That price goes away at midnight tonight, so go ahead and register now. Take action. Get my winning swing trading charts and no, you don't get the hot blonde, but you get the winning swing trading charts freaking ebook with successful calls for my swing scan service. If you go to trademastery.com/join, absolutely free. Operators are not standing by, and neither is that blonde. But hey, I digress. Bada bing. Let's take a look at our S&P, baby. We got a hammer, we got a tweezer. We got a hammer that's the left portion of a tweezer bottom, whose data points collectively define a 50 SMA. So we may be hammering out a low in our S&P. I'll be looking to go long in our positions. If we break the 2900, I'll look to scale into my short positions with the inverse ETFs if we lose that 2820 region. So market had been going up. It crashed and burned on China trade wars news. It's slowing its heels here, may be good for a bounce. Let's take a look at some charts though. First up to bat is one of my members' picks, ZYNE. Who can tell me what's great about this chart? What's visually, recently, really good about this chart? That can be as sophisticated as an answer as it's going up, or as technically minded an answer is, well, we've got a large ratio of green to red candles, and we've got large whole row body green candles in the last trading week, and the trading range almost tripled, right, from 5 a share to 13. So it over doubled, almost tripled. What I like is the fact we got a nice 45-degree angle breakout. One of your key signals, a good key technical signal, is large green candle piercing any of the major moving average lines, especially a 200 like this black SMA. Do you see that large green candle? Look at that green candle. Light them up, baby. I got your 6. Okay, well, let's infill. Target inbound. We got tangos up here with the bearish upper shadow. Sold off. We got another green candle that put us back in the money. Ran up. We got name that candle pattern. Who can name that candle pattern? Excuse me while I have more coffee. Like I really freaking need more coffee. But name that candle pattern, guys and ladies. Right, Wendy? Right, Louise? The ladies have it so far. Hey, Bob. It is, in fact, a bearish engulfing. So, of course, that would have told you to closed the trade on a loss of support near 1150. It's kind of dinking around up here. I don't like the bearish upper shadows, but hey, if it gets over 13.5, maybe good for more. So I'll keep that one on the radar for my own swing trades. For those of you trade cheap ass stock, or let me just call it cheap stock, sorry, remember, TNK. And again, I have no clue what these companies are. I'm a professional trader. I don't care what the companies are. I'm not a talking head. I'm not a forward earnings look like this and our price earnings ratio looks like this and we have exposure to China overseas and sensitive to no, we don't care about that. That's what talking heads talk about because they don't know how to frickin' trade. Traders talk about price action, baby, and volume. Price is the ace of the deck. Volume is the king. That's all we care about, making the money. So anyway, for those of you who do trade cheap stocks, this one looks pretty good, TNK. I like this chart because it's been consistent. Unlike a lot of the ones that these momentum moron kids out there teaching pop and drop and they burn up everyone's trading accounts. Stop the madness. There's got to be a better freaking way. You want consistent uptrending charts, not just the daily percent gaining charts that are out there. That's a fool's errand, and you will blow up your trading account if you're just chasing cheap stocks without consistency and a professional trading approach. All right? Get my word on that. I've trained tens of thousands of traders. I know what the shut the front door I'm talking about. Next up to bat, we've got ENPH. ENPH looking good, baby, because we got a gap continuation, a gap from 10 up to 12, ran all the way up to just under 14.5. Look at the ratio of green to red candles. That critical mix is really important. And you can see what, 3, 6, who do we appreciate? Ken, rah, out of 8, 6 out of 8 candles. We got a majority of days are green with buyers in charge. We've got buyers large and in charge. So we'll see if ENPH continues on up. I have no freaking idea what these companies are. And if you ask any professional trader, ask any of my Wall Street clients, ask any market maker specialist, why is price going up? What's their answer going to be? And it's not going to be, well, there was good news and there's good earnings. That may be the I guess, the foundation reason, but the ultimate, the making money portion of making money as a trader, as far as we think about it, is why is it going up? There's more buyers than sellers. And all we care about is buying from somebody at one price, selling to someone else and unloading at a higher price, banking our profit, lather, rinse, repeat, and we're off to the races. So anyway, nice. So my reason in telling you that is to have you ignore the talking heads, ignore the news, ignore the fundamentals. We are price action day and swing traders. That's what we do for a living. It's not about second guessing earnings release. And so that means if you're an investor, then yeah, you do need to do your due diligence. As traders, as pro traders, all we care about is price action. That is our due diligence, is consistency of uptrend continuations. We have like a nice channel. I'm not going to draw the whole channel out, but a nice channel. This guy's a cheapie from 4.5 to 6. What do you notice about this? A couple of key things, a couple of key metrics. Support on this chart is around 370, resistance at around 595. We got over 2 points of range on a $6 stock with a consistent trend. That's why my traders like my alerts so much, because I pick things that are actually consistent. That's really important. We're still at the 5,600 mark. And we're about halfway through. We're going to take a look at industry groups next. So it's called Social Proof, 5,600. So we finally broke 5,600. And in celebration of that, I am offering for a limited time only, meaning like frickin' today only, best deal I've ever offered on my live room, just $4.95 for 6 months access. The link is in the chat box here. It is not going to be sent out via email. It's not going to be on YouTube. I'm going to edit this portion out of the video that I'll put on YouTube eventually because it's only for you guys as a thank you for being here, right? I used to charge and happily get paid $4.95 per month for my live room because my calls are so damn good. But now it's only $4.95 for 6 months. And I'll make it up on volume. I got so many thousands of people. So join now using the link that's in the chat. You click on the chat area of the GoToWebinar interface, and you can join me today only. 6 months for both the live room, 5 days a week, live real money trading, plus my swing scans weekly advisory on the small caps for swing trades as well. as our live room experience. So take action. Now I've got a good play that I'm in. I'm currently long 100 shares SOXs. I rode it out. I was in at 550 and it dropped so far I said, well, F it. I'm going to put my stop under 4. And it held and I held. So now I'm back to break even, close to break even at 5.5. The reason I say that is because this is SOXS is the inverse semiconductor ETF. I will be playing it on a bounce over 6.5, over 7.5, over 8.5. I'll be scaling in 100 or 200 shares at a time. I'm going to sit out the 9s. That's an exit target is up near 950. I'll rebuy if it takes out 1050 and 1150. And the reason I like SOXS for potential pivot is because it's got so much upside potential, right? If I can double my money, I'll be a happy camper, right? So SOXS. Now let's take a look at our industry groups. Strongest is insurance, right? That's the strongest sector. The weakest, or one of the weakest, lately has been our semiconductors. After a big move up, it crashed and burned with the S&P. So we're seeing weakness in the semiconductor sector, and for that reason, the inverse ETF is the correct play. At least that's what I'm trading, so your mileage might vary. But let's take a look at strength. Our S&P chart looks like this. So which of these, this is just yesterday, what we care about is multi-day trends. Which ones have good, stronger, better strength? Insurance sector is strong. The finance and banking are just okay. If we look at pharmaceuticals and biotechs, you can see they're down in the muck. So pharmaceuticals and biotech are not good sectors. And that, by the way, if you're curious, from a pro trader's standpoint, that's why so many of the small cap $3 small cap pharmaceuticals that have gapped up this last couple of weeks, if you've tried to trade those, didn't go anywhere. They kind of gapped and crapped and chopped around. That's because the underlying sector is weak. You have to be smart enough to know these correlations. So thou shalt not be, or at least I shall not be trading biotechs and pharmas next week, most likely, because the overall sector looks like crap, right? That's a horrible chart. That's a good technical term. You have to have the discipline to not trade stocks within bad sectors, you know? You have to be like a drill sergeant. You have to kick your own butt about not over trading things in bad sectors. Buddies in the middle, you know, you got to say to yourself, what is your major malfunction? Numbnuts, you are trading in the wrong ass sector. You're going to lose your butt. Drop and give me 10. Keep small stops and trade in strong sectors. Know the difference between charts that are going to work and ones that are going to jerk you out, and make sure that you're on the right side of it, rookie. All right? So, with apologies to R. Lee Ermey from one of my favorite military movies, FMJ, Full Metal Jacket. Anyway, the point is, a little humor there for a Saturday morning, eh? Anyway, the point is, have fun with it, but make money. Stop pissing away your money at Wall Street trading the wrong way. Learn from people that know what the F we're talking about. There's so many jagoffs in the trading industry that newbies are saying, I'm an expert day trader, derp, and they've been day trading like 5 freaking years. I don't think so. Learn from people that know what they're talking about, and make sure that you're trading the right types of charts in the right sectors that actually have a shot at giving you money. For example, as much as I love oil and gold, the sector charts are crap, right? I frequently trade Nugget, JNUG, and Dust, but not much this past week because they've been crappy charts, right? Where's Dust? Come on, Dust, where are you at? It was a 4% up yesterday. That one looks okay for a swing trade, right? Okay for a swing, not so much for a day trade. But oil and gold have been relatively horrible to trade lately. I did well with winning trades in Dust and a bounce in Nugget a few days ago too, but I'm not over trading those sector charts or those instruments because they're not in a relatively strong sector. Does that make sense? Copy that, or drop and give me 10. Those of you without a military background, I was an RO, I was a captain of the rifle team, so I've got a military background. Almost, I wasn't active duty, but drop and give me 10 if you are trading within the wrong sectors. That means drop and 10 push-ups. Alpha Bravo Charlie Delta Echo Foxtrot Golf Hotel India Juliet Kilo Lima Mike November Oscar. I won't read off the whole phonetic alphabet, but watch out for the tangos out there. You got some bad guys out there trying to take your money, both in the trading education business and especially on Wall Street. And all the guys I've worked with and ladies I've worked with on Wall Street, the biggest difference between the successful and unsuccessful traders is bada boom boom. What differentiates successful from traders who shut the front door and lose their ass on Wall Street? What's the number one difference in successful versus traders that F it up and blow their money? Tell me. I'd love to hear your answers. What's the number one difference in successful versus unsuccessful traders? Jagdish got it right. Wendy got it right. Phil got it right. Nan got it right. Hey, Nan. Hey, Ergen, he's asking what's the best setup with the highest probability to win next week. It's all going to be minor gap continuations on a day-by-day basis. Or the swing trading types of charts. The kind of charts that I gave you here are really good for swing trading candidates. Roku and Uber might be good for intraday. But for day trading candidates, I cover those in the live room every single day. It's going to be different based on the day's pre-market percent gainers. So you have to be in the room to identify those. But, you know, charts like this with some kind of consistency are reasonably good odds if they break over the whole number, right? Anyway, the number one correlate of success in trading is the ability to keep tight stops. That's more important than chart pattern recognition, more important than timing, more important than technicals, more important even than knowledge and patience and all those other things that many of you have posted. Those are all important elements, but the one that trumps them all is small stops when you're wrong. You know, when in doubt, get out. Shut the front door on the trade. If it's not working out, get out. I do that every single day. That's why my stops are so small. I have arguably the tightest stops in the business, right? My day trading stops are usually always under the 20, 30, 40 bucks each, at least 90% plus of them. Yesterday, I did have a stop $70 in TVIX on a drop. It's like a 70 share trade, and I had a 1 point stop on an intraday swing. So I did take a $70 hit. So I will take stops that big, but usually the other 98% are down 20, 30 bucks because I grind entries and exits out the right way. So play it smart, play it right. Got a couple of minutes left, but the size of your small stops is it. What else? So that's our sector and a few hot charts to keep on track of. Remember, one of the things that you want to do, even if you're not a live room member, at least do what I do in the live room and put your entry triggers in play before the opening bell. I always put my buy stop limit orders in my Fidelity account for live real trades every single day before 9:30, and I show them to my members so that they can see the actual real trades that I've got set up, 50, 100, 200 shares maximum. I like to keep it real tight, and I'll re-enter if I get stopped out small. I'll scale in if it keeps running up in my favor, which often they do, right? Like my favorite TVIX. So do you have your buy stop and sell stop orders in, or your buy stop, and if you're shorting, your sell stop orders in before 9:30. That's one thing that my live room members appreciate. In addition to all the detailed training and the honest, correct, intelligent approach to identifying patterns that make sense for the gap continuations and the breakouts. I also give people the missing link, which virtually no one else in the industry does, is specific entry triggers to use identified ahead of time. That's the number one, in addition to the success rate of the percentage of winning alerts that I post for everybody. That's great, but even more important from a learning standpoint is having your triggers identified ahead of time. So make sure you're doing that as a trader, either day or swing trading. Do have the equivalent of that kind of alerts box. It's not enough to just have a watch list, right? The watch list is nice, but the watch list doesn't tell you where the heck to enter. So I give you that missing piece of the equation. Thanks for all of you who've been ordering. No. What else? Hey, thanks, Guillermo, saying I'm Kenneth, my coach. Appreciate it, man. Or rejoin the room. It's been a while. Swing trading only because the damn census day trading rule. Yeah, I was thinking about that as a good point. One workaround is not to trade with an overseas broker. Anybody that's trading with the Bahamas or some other sketchy broker in some third world country is not to be trusted. The workaround is you can trade multiple accounts. So you can put like $3,000 in Ameritrade and $4,000 in Fidelity or E-Trade or whoever else is out there. And that way you can do more than 3 trades in 3-day trades in 5 days, but just in different accounts. So it's not like you can only make 3 trades. It's 3 trades per account in a 5 days. So that's a smart workaround, right? That's a good, I help traders, right? So if you don't have the 25K for pattern day trading, you can always at least get a few trades per 5 days off in multiple accounts, right? So that is a valid workaround. So you can like open an Ameritrade account, an E-Trade account, whatever, whoever you want with less than 25K, and you're still limited to 3 trades within 5 days per PDT rule. But you know, if you have like 3 accounts that are small, that gives you 9 trades across the 3 accounts within 5 days. So that's another workaround that you can use, much better than using an overseas sketchy broker that's not reliable. So good point. Hey, thanks folks. Wow, all these comments. Hey, Mark. Thinking about Matt. Hey, Bill. AKRX. We covered AKRX in the live room this past week. It was kind of pop and drop though. A lot of these cheap stocks have gapped up and then they just crater on down with horrible results, and they don't bounce much at all when they bounce. So I don't know if you found that too. A little throat lozenge here to help my voice. Don't buy, or at least I'm not buying bounces in cheap charts that gap up and drop, because the bounces are usually no more than 20 cents or so. So that's not worth it. So the cheap charts are not as good as you may want to think. What else? I think that's about it. We're going to wrap up. Wanted to thank all of you for being here, but again, that was a good trigger a few days ago for my live room. That's the best one of the week. That's the best one in a couple weeks, because it ran up almost 2 points, actually over 2 points on a $14 highly liquid stock. And again, that was a good call. I traded this one on the bounce right off near the exact bottom yesterday. Is one of many TVIX trades I did yesterday. So small size, just 100 shares, $4 commish. So I wanted to thank all of you guys for being here. I've got to run. I've got swing scans coming up in a few minutes. But do be sure to join my live room. You have my word, it's well worth the $4.95 for 6 months access with me. Normally, like when I do seminars, it's up to $1,500 for 2 days. Or when I speak at the Money Show as a premium speaker, it's like $300 for 4 hours. Well, you're getting $4.95 for 180 hours of training with me. So it's a real good deal. So we meet Monday through Friday now. I used to just meet Tuesday, Wednesday, Thursday, because Fridays are usually horrible to trade, like yesterday. Mondays are kind of not too great either, but I'm there for everybody 5 days a week trading and teaching. And most importantly, most valuable to your development as a trader is I answer your questions in real time with live charts. If you have a chart you'd like me to pull up, I'm more than happy to do it and tell you where to take a shot. Or if there's something I don't like about the chart, I'll politely tell you that too. But the main thing is I give you a core watch list of 5 to 7 stocks with specific entries before the bell each day, and then I walk you through them as I make live real trades. So you look over my shoulder and get live coaching. So I hope that'll be of value to you. I'm very sincere about making this the best in the industry. I realize there's a lot of new competitors out there, and a lot of them making a lot of phony performance claims too. So to be competitive, I just compete on competency and honesty and authenticity. So I hope that makes the case and that you can join me. And again, this is just today only. It's not no BS. I'm not going to extend the sale offer. I'm not going to repeat it anytime soon, maybe this fall or something. But in the meantime, just $4.95 for 6 months if you join me today. And thanks to those who've been, I'm looking at my email there, my Gmail, I can see the orders coming in. So thanks to all of you for ordering, and I'll see you guys in the live room. Take care and best wishes for success. Minimal pitching, hopefully maximum value. Was this good? I like to have some fun with the caps and the characters to liven it up a bit and give you some really good charts that actually make sense, right? So what an amazing idea. I hope that it helps. Hey, Chris. Yeah, I did record this today, so I'll get it on the YouTube channel, hopefully later today. And yeah, Judy, yeah, you can use a credit card, no PayPal account, don't like it. Yeah, I understand. There's a lot of people that don't like PayPal. Just send me a support ticket or email me, and I'll send you a one shopping cart. And thanks for the reminder. I was going to mention that if you don't like PayPal, I've got a one shopping cart regular merchant account that takes Visa and MasterCard. So please just email me or send me the support help ticket or whatever, and I'll send you the one shopping cart link. I just don't want to post it here because it's really long, but I'll email it to you so you'll be all set up. Hey Judy, my email address, just ken@trademastery.com or ken@daytradinguniversity.com. It'll all get to me. Hey Wendy saying I'm wired. Lots of caffeine. I love caffeine because I want to give you guys my best. It'd be high energy, Ken. So I get a lot of sleep. I don't drink alcohol anymore. I don't take any drugs or eat much junk food. I try and stay healthy and clean. Healthy and clean and lots of caffeine. That's our rhyming phrase of the day that pays for active traders. See you guys in Swing Scans who are members momentarily. I got to run. See you guys next time. Have a great week and a weekend. Be safe out there.